20 years, yeah, that's how long a recent report said it could take the average person in Ontario to save up to 20% down payment. I mean, when you hear a number like that, it's easy to think that home ownership is just completely out of reach for you. But here's the thing, there is a big piece of the puzzle that most people tend to miss. The secret is not about saving 20 years into one giant account. The real path to getting the down payment is actually about combining a few different strategies together. In fact, most of my own clients, they use 2, sometimes even 3 different sources to hit their goal way faster. So in this video, we are going to walk through it all. We will start with that 20-year problem, then we will look at using tax-advantaged accounts, cash and gifts, and yes, even borrowed money. And then I will wrap it by showing you how to put it all together. If you are new here, my name is Jenny, I'm a mortgage agent. Please go ahead and book a meeting with me to discuss your number specifically. And if you want to listen to more videos like that, like and subscribe. Let's tackle that first section, 20 years problem. First thing first, we need to understand the goal. So how much do you actually need for a down payment in Canada? It's probably a lot simpler than you think. Okay, so the minimum down payment works in a tiered system. Think of it like this. For the first $500,000 of your home price, you need 5% down payment. Then for the part of the price above that, up to 1.5 million, you need 10%. If you're looking over $1.5 million, it's minimum 20%. So let's say you're buying a $700,000 home, the math works out to be $45,000 down payment. Now, you've probably heard this term mortgage default insurance. What the heck it is? Well, if your down payment is less than 20%, you're required to have an insurance. And all it is really is an insurance policy that protects your lender in case you cannot make your payment. Yes, it protects your lender. The cost usually just rolled right into your mortgage, but honestly, it's the key that lets so many Canadians buy a home without having to put and save up the full 20%. All right, so that's the goal. Now, for the strategy number 1, let's talk about where this money actually comes from. We are going to start with a couple of really powerful tools for the first-time home buyers, tax advantage. Okay, so you have got 2 main players here, First Home Saving Account or FHSA and RRSP Home Buyers Plan. The FHSA is a fantastic new tool. Basically, your contributions are tax deductible, which is great. And when you pull that money out for your home, it's totally tax-free. Best part, you do not have to pay it back. Then there is RRSP Home Buyer Plan. This lets you to borrow up to $60,000 per person from your own RRSP, also tax-free. The big difference though is that you do have to repay that amount back into the RRSP over the next 15 years. And here is the fantastic little strategy that a lot of people don't know about. It's called the 90 days RRSP strategy. If you have contribution room in your RRSP, you can put money in, get that immediate tax deduction, and then after waiting just 90 days, you can withdraw that exact same money using a home buyer's plan. It's a really slick way to boost your down payment and get a nice tax refund at the same time. The key is just remembering that 90 days waiting period is a must. Okay, into our next strategy, and this one is a bit more straightforward. We are talking about using your own cash and, of course, gifts from your family. So this is your money in checking and savings, but honestly, your TFSA is probably one of the best places to save for the down payment. And if you ask why, because any growth you get inside a TFSA is completely tax-free, and you can pull your money out whenever you want with zero penalties. Getting help from a family is super common for the first-time homebuyers, and the lenders are totally okay with it. There is just three really simple rules you will have to follow. First, the money has to be a true gift, not a loan that you have to pay back. Second, the person giving you the gift has to sign on simple gift letter saying exactly that. And the third, you just have to show the proof the money being deposited into your account. All right, our third strategy, did you know you can borrow part of your down payment? Let me show you how it actually works. Okay, here is the most important rule to remember. Lenders require that the first 5% of a home purchase price comes from your own resources. So that your savings, your RSP, a gift from your family, that kind of things will count as your own resources. But this is the key. Any amount you put down above that first 5% can actually be borrowed. So let's say you're making a 10% down payment. The first 5% has to be your own funds, but that second 5%, you could borrow that from your line of credit or actually take a loan. Now, obviously, there is a trade-off here. The big pro is that borrowing can help you get a bigger down payment much faster and maybe even help you to avoid a mortgage insurance we talked before. But the negative aspect is that monthly payment on that loan gets factored into your debt, and that could reduce the total mortgage amount you can actually qualify for. So it's definitely a bit of balancing act. So we have gone through a few different strategies now. And the most important thing to remember is that you do not have to pick just one strategy. The real magic happens when you start combining them to create a custom strategy that actually works for you. Let's look at a quick example. Imagine you need $50,000 down payment. Well, maybe you pull $25,000 from your RSP using a home buyer's plan. You get another $15,000 saved in your TFSA, and then maybe your parents give you another $10,000. See, suddenly that big scary $50,000 number is broken down into much manageable chunks. And that's really the main takeaway here. That whole 20-year timeline we talked about in the beginning, that's based on the idea that you just slogging it into one big single account. But the reality is that path to a down payment is not a long, hard slog. It's a flexible strategy using all different tools you have available. So instead of looking at that big number and feeling overwhelmed, I want you to ask yourself a different question. What combinations of these strategies could work for you? Just knowing your options is the biggest first step. So take a moment, look at your own situation and start mapping out a plan. You might be a lot closer to that goal than you think. Thank you for tuning in, and I'll see you in the next video.